Thank you, Anu. Good afternoon, and thanks for joining us. I'm Graham McKenzie, Head of Exchange Traded Products at the Toronto Stock Exchange. This afternoon, we're going to talk about cryptocurrencies. We're going to discuss the factors behind why it's on everyone's radar. Why are some arguing it should be part of yours and your clients' and investors' portfolios, as well as other factors investors and advisors need to consider when investing in cryptocurrencies. We're pleased to have join us today Elliot Johnson from Evolve ETFs and Alex Tapscott from 9 Point Partners. Welcome, gentlemen.
Happy to be here.
Thanks, Graham.
Awesome. Great to have you with us. Perhaps before we sort of get into the topic at hand, maybe what would be great is to hear from each of you about who you are and maybe why your perspective on this topic should matter to them. So Alex, why don't you tell us who you are and your background here.
Thanks, Graham. So I started my career in capital markets. I was on the institutional sales desk at Canaccord Genuity when in 2014 I learned about this thing called Bitcoin. It was before blockchain or crypto asset had entered the vernacular. And the more I looked into Bitcoin, the more convinced I became that this was one of the most important, computer science innovations in a generation, and also as an asset class could become super valuable. Within a year of discovering Bitcoin, I quit my job to write a book about the subject and to pursue a full-time career in crypto assets. And that has led me on various different paths and eventually to 9 Point Partners, where I head up the digital asset group. 9 Point Partners as a firm has about $8 billion in assets under management and institutional contract. We pride ourselves on developing innovative strategies, developing innovative products for clients. And so digital assets fits perfectly into that. So for us, launching a Bitcoin ETF, which we did earlier this year, really for me and for the firm is the perfect marriage of the expertise in crypto assets and also the focus on capital markets and on public markets. My belief is that this asset class is the foundation of the future in many respects, and Bitcoin as one of many different crypto assets is a key component in investor portfolios and is a great way to get exposure to the broader innovation that's happening in this space. And I've always wanted to make it easier for the average retail institutional investor to get exposure to this innovative sector. There's a lot going on, but a lot of assets they can't readily access. So putting it into an ETF is a very convenient, safe, and efficient way to do that. And so, we've been obviously very overwhelmed and very pleased with the reception that our product and the other ETFs in Canada have gotten so far, but really feel like we're at the top of the first inning here in terms of both our subsector here with the ETFs, but also in terms of the broader blockchain and crypto innovation. So it's a really exciting time to be in this space and a great way for me to apply my passion to business, that's for sure.
Great, thank you, Alex. And Elliot, do you want to shed some light on who you are and why your perspective sort of matters to this topic?
Yeah, thanks, Graham. I think cryptocurrencies really go to the heart of why we started Evolve back in 2017. So we've just hit our 4-year anniversary and we're pretty close to $2 billion in assets under management. And we've been successful in building our business because since day one, we've focused on disruptive innovation. So we tried to get a Bitcoin ETF off the ground in 2017 based on the futures that were available at that time, but we weren't able to get there with the regulators until earlier this year. But in the intervening time, we launched Canada's first cybersecurity ETF, the world's first ETF to invest in the innovation happening in the automobile sector with electrification and self-driving technologies, and a number of other innovation funds that are all about industries that are in disruption and being disrupted by technology. So it's where we've built our brand. Obviously, we were delighted to be among the issuers to bring out Bitcoin ETF in February of this year, launching it with you on the Toronto Stock Exchange. And in April, we followed that up with Ether or Ethereum ETF. And then just last week, we launched a fund that holds both of those two ETFs for people who want a turnkey solution addressing cryptocurrencies as an asset class. So when we look at the world and we look at what investors need, since the beginning of our business, we've been thinking about what's changing the future, what's transforming the world around us. We really believe that we live in one of the most exciting times ever to be an investor because technology is hitting really this hockey stick growth curve. Decentralized digital finance is a key part of that. We think we're going to see transformations in the finance industry through Bitcoin and other cryptocurrencies that will rival the kinds of transformations we've seen through the information industry and social media transformations around the media landscape and so on and so forth. All the stuff that we've really seen in the past 25 years coming out of the transformations that happen as a result of technology. So it's where we spend our time. It's what we do, bringing these investors, these themes to investors through ETFs. It's great to be here. Thank you for having this panel and helping to spread the word about the innovation that's happening with digital finance.
That's cool. And you know, I think you both, so Alex, you said, you know, we're here, you know, in early innings. Elliot, you mentioned sort of the hockey stick sort of growth curve. But for our audience sake, you know, perhaps maybe you can help them understand, and us, including myself, you know, why is Bitcoin and cryptocurrencies getting so much attention, both from investors? It's had a spectacular rise, you know, over the course of the last year and a bit. The media, everyone. So what is it that's really leading this? Alex, you want to tackle that one?
Sure, I'll take a crack at that. So Bitcoin solved a very important problem in computer science. It's called the double spend problem. Basically, how do you ensure that when you move something of value digitally that you don't leave behind a copy or you can't send another version? Until Bitcoin came along, basically there was no way to create scarcity for digital goods, and Bitcoin solved that problem. And so for the first time in human history, basically we had a way for individuals to move and store value on the internet without the need for banks and brokers and other third parties. Now, what's really interesting about that concept is that it works really well for Bitcoin, and it also works really well for almost any other kind of thing that requires scarcity, which it turns out is basically every asset in the world, right? It's important that when you sell someone a share of a company that you can't sell the same share to someone else. It's important that when you vote in an election that you can't vote again. It's important that when you move money that you can't send the same dollar to someone else. So anytime that there's this movement and storage of assets is an opportunity for blockchain and crypto assets. Bitcoin is sort of the foundational original crypto asset, has gathered a lot of has built up a lot of value over the past decade, in large part because it works, and it works very well, and it's proven to be very resilient, and it's proven to be an excellent store of value, not only for investors in places like Canada and the US, which is probably most of our audience here today, but also for people who don't have access to financial services, the unbanked populations of the world. And that's why Bitcoin usage in places like Nigeria is actually way higher than it is in places like Canada. And that's because it's a necessity, right? So in the same way that, the internet and mobile technology sort of leapfrogged traditional, landlines in places like India and elsewhere, we're seeing crypto assets leapfrogging traditional banking. And so that, if you think about the analogy to the internet, it's a very big opportunity. And just to quantify like how large this is, I think it's important to look at the market valuation. This time 10 years ago, there was no crypto asset market. Today, it's about $2.2 trillion. Bitcoin's value is just shy of $1 trillion, which basically means that Bitcoin has created more value for holders and for investors than the cumulative value of every single unicorn that has been created since the financial crisis, right? So every single private business that was incorporated since then has a smaller value than Bitcoin. So you might say, well, Bitcoin feels like it's, well on its way to maturity. And I think that's true. And that's what makes this particular time such a sweet spot, because it's big enough and there's sufficient market infrastructure that makes it an investment that works for retail institutions, I think governments and other large entities, but also it's early enough on that hockey stick, that analogy that Elliot used, that I think there's still much more growth to go. One of the metrics that we use is looking at Bitcoin relative to gold. Bitcoin does have a lot of similarities to gold. It has, it's not created by a government. It takes time and energy to produce. There is a known, or at least a limited supply of how much Bitcoin there is in existence. It's uncorrelated to other financial assets similar to gold, and it's proven to be an excellent addition to a portfolio based on all measures of risk-adjusted returns. However, today it's still a tiny fraction of the size of investable gold. I think it should be, and it will be ultimately worth more than gold, because not only does it have those properties that are similar to gold, it actually has a whole bunch of things that make it better. It's easier to move, it's easier to store, it's easier to divide into smaller bits, which makes it much better for payments and other retail use cases. And because it's a technology, there's other utility that we haven't yet sort of uncovered or devised, right? So in the same way that the internet in the early 90s could not have necessarily predicted, the rise of Uber 15 years later, today we can't necessarily predict the implementation of Bitcoin in the broader economy, right? So in my view, it's big enough that it's a good asset class for any investor to take a serious look at, but we still have a lot of room to run here.
That's great. Thank you, Alex. And I think, Elliot, that sort of really makes a good argument for why Bitcoin and cryptocurrencies exist. But as an investor, why why do you believe that cryptocurrencies should fit in someone's portfolio?
Yeah, and I think part of the story is all the things that Alex said, which we completely agree with. But what's happened now with the past year or two is that more investors that we're talking to are saying to us, we have job risk if we're not familiar with Bitcoin. Whereas back in 2017, they were saying, I'm not so sure I should be looking at this. It doesn't seem like it's here to stay. So it is here to stay. So number one, investors, I think, for the most part, are well served when they are buying into assets that are, proven themselves out to be durable. I don't know of any asset that is analogous to Bitcoin in terms of the bear market that it went through and then came roaring back the way it has over the past 12 months. That's brought a lot of attention for investors. So now you have investors saying, hang on a second, if I didn't hold this over the past few years, I've really missed out because I would have actually had a much better portfolio if I'd held it. I need to understand how it's working, and I need to understand what to do with it. And so now people are having these conversations. How do you fit this, to your question, into someone's portfolio? Matt Hogan, who's a crypto analyst, wrote a paper recently that says that if you had held 2 to 3% of Bitcoin, I think it was 2.5% quarterly rebalanced in your portfolio for the past 3 years, you would have increased your 60-40 portfolio by returns by about 13%. So some of this analysis is now happening where financial analysts are looking at this and saying, okay, let's look at what this would be as an ingredient in my portfolio. Recognizing the volatility in the asset class, recognizing that while adoption continues on this low point of what we believe is this hockey stick curve, there's higher volatility than there will be in the future when there's more adoption. We talk to investors and we see more folks on the sidelines than actually investing and holding crypto assets because there continues to be this analysis that happens with the big investors out there. As more investors come into the asset, we think the volatility will drop, which will allow you to have a larger position in your portfolio. But as it stands right now, I think what's happened is a lot of investors are moving off zero. They're saying zero is no longer the accurate amount that I should have in crypto assets because they are real. This is legitimate. Things don't go through the kinds of cycles we've seen in Bitcoin over the past 5 years and turn out to not be legitimate in the future, not to mention countries like El Salvador making Bitcoin legal tender. That we know this is a real thing, it's a real asset. So now you have investment committees and individuals and investment advisors who are sitting around saying, there is a significant major asset class, to Alex's point, that has delivered more value for investors than Silicon Valley has since it was created, that we're not involved in, we don't have an allocation to in our portfolio. So we need to size that around the volatility and consider how we're going to use it, how we're going to monitor it, how we're going to continue to access it going forward. So that, I think, is, there's no one answer to how it fits in your portfolio. It depends on your risk level, but it's definitely possible to now use if you take an appropriate amount based on the volatility of the asset.
Thanks, Elliot. And that makes a lot of sense. And I think you sort of touched on, you talked a little bit about volatility, and there's no doubt you'd have to be sort of, in a cave in hiding out for some time not to realize, not only the spectacular rise that Bitcoin has had, but it's been a volatile ride. And how do investors overlook that? Alex, like you can't ignore it. So how do you deal with it?
Yeah, I don't think you overlook it. I think that you look at how much you're comfortable holding and whether it's a fit given your investment criteria, right? And everybody's different, so everyone's going to have a different size. Our view, obviously you can trade Bitcoin, you can make money on the gyrations and the ups and downs, and there are lots of people who do that. For our client base, we're trying to educate them about why Bitcoin is a good long-term investment in a well-diversified portfolio, pretty much. And there are so many reasons for that. One, we're still at the early stages of what I think is a multi-decade technology revolution where Bitcoin will play a starring role. And so over the long run, as more and more assets become digitized, as more and more commerce moves online, and as increasingly important as these new sectors like decentralized finance become, Bitcoin stands to benefit. So there's this long-term trend. The other thing too is, it's a real headache to trade around lots of volatility. Best to just hold, which is why I always remind myself with this mug that I keep on my desk, just HODL, hold it for the long term, keep calm and carry on. But in all seriousness, that is ultimately the best way to think about portfolio construction, especially with an asset like this. And, there are lots of assets that have been volatile over time. Tesla stock's been really volatile, and you would have been really good to hold that. Gold in the 1970s, after Nixon closed the gold window in 1971, gold went through this period of price discovery because we were entering a new monetary regime. How much would this thing really be worth in a free-floating environment? And it turns out a lot, but it was a pretty bumpy ride if you look at the chart to get to the point where gold was hit its peak in the 1980s. So volatility and returns are not antithetical. In fact, oftentimes they're highly correlated, right? So it's really a question of risk level and how much you feel comfortable holding in a portfolio.
I think there's obviously a lot of validity in your arguments about the holding and assets that have had great returns, have had volatile rides. But from a practical perspective, we mentioned it, sort of its use of Bitcoin in the internet and being able to pay for things, or living in Nigeria and other places. But you got to think, a skeptic is obviously concerned about the use of Bitcoin from a practical, like if I'm going to buy a house with Bitcoin, between buying it, the seller's got to transition over to regular cash, I would presume. So is there a practical use?
Well, maybe I'll just respond to that quickly because it's in reaction to what
I'm directing it to you. So.
Yeah. So, you can't buy a house with gold bars. That doesn't mean gold's not worth $10 trillion, right? So that's sort of point one, which is something doesn't need to be fungible in every scenario for it to have tons of value. You can't use shares of Apple to buy your house either, and it's worth $2.5 trillion. The second part is that, Bitcoin as for Canadians, is used as a store of value, as an investment, as a financial asset that offers, all the benefits we've discussed. But for other people in other parts of the world, there is no recourse, right? So if you're living in a part of the world where the local currency is far more volatile than Bitcoin is, where you don't have access to a bank account, and where the financial infrastructure is not sufficiently built out, then Bitcoin is something that actually has way more utility, even for regular everyday payments, than something else. But you raise a more interesting point, which is just around myths, or I should say, concerns about Bitcoin, including certain myths. And there are some concerns about, is Bitcoin too volatile? Is Bitcoin, and I think we've addressed that. Is Bitcoin only used for speculation? Do criminals use Bitcoin, et cetera? And we actually have developed some educational resources for people. I read a column for Fortune magazine on Bitcoin and digital assets where I try to dispel all of those myths. So I think all of that is part of the education process. And I think that's why it's so important for folks like me and Elliot and others to educate the market for the first principles about what the asset class is and what it does and why we think it's useful and important, so that people are making an informed choice whenever they do decide, to buy into the asset class, whether it's through our ETF or someone else's.
No, that's great. And I think when people have conversations about Bitcoin, that's generally one of the first things people say, well, you can't really use it to do anything. And I think you've sort of helped answer that question for the audience. Elliot, I think you touched on it a little bit earlier. about, the vehicle in which people can buy and access Bitcoin and cryptocurrencies. How is the launch of ETFs and similar types of products really changed the landscape and brought Bitcoin into people's investment portfolios, and why has that mattered?
Well, first of all, maybe as a point of congratulation to the TSX on this, Bitcoin ETFs are as important to crypto asset investing as ETFs were to investing in mutual funds, and the first ETFs in the world were listed on the Toronto Stock Exchange. So Canada's been at the forefront of this, and this is no different from that. What it really has to do with is access to investments for people who have different circumstances. Sure, some people say, well, if you don't own your keys, you don't own your Bitcoin, you have to buy it physically and hold it in your own wallet, and that's the only one true way. But that's not really the practical way in which people invest in anything. And so while I could buy a bar of gold and put it under my mattress, I'm much more likely to use an ETF so I can hold it in my brokerage account. If you use an ETF, you can hold it in your tax sheltered accounts, which obviously a lot of investors use to save for retirement or save for their children's education. So putting investment assets into ETF format is really important to bring them to the investing public. It's such a wonderful way to facilitate investing in things that otherwise would require you to move your cash out of your brokerage account. And then it unlocks the ability to use it in a portfolio strategy. So if you want to have Bitcoin be 2% of your portfolio and you're going to rebalance every month back to 2%, you want to hold it where you're holding your other investment assets, which is in your brokerage account. So it's super important for that. Otherwise, you have to be wiring money back and forth to your crypto exchange and figuring out exactly how to do that. And people just aren't going to do that. Whereas you can put this into a whole variety of portfolio strategies once you have an ETF to use. The other side of it too also is it's about comfort for the investor. Digital assets are still in the early days. A lot of investors are not comfortable dealing with their own cryptographic keys. They're maybe not comfortable opening accounts with crypto exchanges that they aren't as familiar with. People like walking into their bank branch, sitting down with their investment advisor, because people appreciate human interaction, and because our entire lives, the Canadian financial institutions, the banks that we have in this country, have been around and they're trusted, and rightly so. We have, I think, it's not even debatable, we have the most stable financial system in the G20, if not the world. And it's because we're building on top of well-regulated institutions. Now, obviously, we have a well-regulated stock exchange, which is where our Bitcoin ETFs are trading. And also the ETF managers, ourselves and 9Point, are regulated, as is every entity within our products. So knowing that when you put $10 into the EBIT ETF, you have $10 of Bitcoin represented by that investment, and all the way through the chain, from the manager to the exchange to the custodian, each of those parties is regulated, audited, and responsible within the laws of their jurisdiction, is an important step for investors. I think this is actually part of that story that you got to in your first question. Why are there more investors interested in crypto assets today? I think a big part of that is because there are more ways for you to use them within your traditional portfolio strategies, using trusted parties that you are used to working with to invest. And so that's the exciting part of this. And that's where Canada should be proud of ourselves. We've innovated this year. We're the envy of the world when it comes to crypto asset investing. There's no question about that.
Thank you, Elliot. And I think you really nailed it to some degree. Is the arguments that Alex made earlier about why investing in Bitcoin and why there's been a spectacular rise and all the reasons why it makes sense. The timing is all about the fact that it's now in sort of a familiar vehicle. There is confidence in the infrastructure that's been set up by yourselves and your custodians and the exchanges and all of those things and regulators to make it happen so that investors can get to it. So I think that's wonderful. Can you also sort of, talk a bit about, other cryptocurrencies in Ether is there a difference in just sort of give us some idea of what's the why is there any difference between them or any value difference?
Yeah, for sure. So Ether, oftentimes people think it's just another Bitcoin with a different symbol and logo, and that's not at all the case. Although the Ethereum project was inspired by Bitcoin, and there's no question that Bitcoin holds that status as being the originator of the idea of digital scarcity that Alex was talking about. But the Ethereum project was set out to try to build a blockchain that is programmable so you can build other things on top of it. And so the Ethereum ecosystem has all sorts of projects that are creating digital versions of what we see in traditional finance, in the credit markets, in foreign exchange, in derivatives. And maybe most famously, just to pick an example from this year, is the idea of digital scarcity has now moved into the world of collectibles and art in the form of non-fungible tokens or NFTs. And now the NBA, for example, will allow you to own the rights to your favorite basketball shot from the game that you saw through the NBA Top Shot program. Or maybe you're a gamer and you play Fortnite and you want to trade some of the things that your character has within the game with other people within the game. Well, Epic Games, who makes Fortnite, is looking at using NFTs to do that. So this is the exciting thing about digital assets, is we can bring the idea of digital scarcity, which means you can't just right click, copy and paste and copy somebody's Bitcoin. You can't copy somebody's ownership to something if it's built on top of Ethereum on one of these projects. You bring that concept of actual ownership to a digital world, and I think we don't actually know how exciting this is going to get, because there are so many places in traditional finance or traditional society where ownership is backed up by large amounts of paperwork and a huge amount of friction. Just imagine buying your house, right? You needed a lawyer, your seller needed a lawyer, you had to have agents who have their, kind of walled off garden for where they can market your house, all kinds of things like that. But why is the ownership of that different than owning a share of Apple or different than owning a Bitcoin? So I think we're on the precipice of some very exciting things in terms of digital asset ownership. And Ethereum is part of that story, because the Ethereum blockchain was designed to be the platform on which a lot of those projects could be developed and could be built using their programmable smart contracts technology. So that's why we were so excited to bring Ether to the market in our ETF in April. And it's why we brought ETC to the market, where we hold both Ether and EBIT. But that's not to say those are the only two cryptos out there. I just want to make sure I make that point. There are others. The crypto industry is growing. And certainly, we're keeping a close eye on what's happening and what's changing. But we still believe that there's innovation to come that none of us have heard of. This to us feels a lot like the internet in the early 1990s. You could see what it's going to be, sort of, but you didn't know really how transformative it would be or in specifics. And that's kind of, I think, where we're going. And people who invest in Ether, I think, see the same future, and they look at it almost like a VC investment in the infrastructure to build the future of finance. And that's kind of what we hear from investors.
That's great. Thank you, Elliot. And I think as we're sort of running close to the end of our time, Alex, I thought it would be maybe a good opportunity for you to sort of give us some just perspective or give some help to advisors here that are listening that have, hesitancy making recommendations or putting clients into Bitcoin and giving them some exposure to their portfolio. What would you say to them?
I would say do your own research. And no, I would say, look, I think that we've made it quite clear that this, is an asset class we're all excited about. Both Evolve and iPoint have, invested in bringing these products to market and have found, great reception from investors. I think that Bitcoin is, an essential addition to any portfolio. I think that it offers undeniable benefits of diversification, and I think it gives investors exposure to the most important technology in a generation, and perhaps in much longer than that. And I think that, with any advisor is going to talk to their clients, and they're going to, walk them through their concerns. And we've talked through quite a few of them today about, well, is it too volatile, or, what is it used for? What is the future, and so forth. Another thing that we hear from time to time from folks is, isn't Bitcoin a polluter? Is Bitcoin creating a large carbon footprint, as a result of the mining process? Now, I don't want to get too deep in the weeds, but basically, the way in which Bitcoin is so secure, and how we all have all this confidence that when we move Bitcoin peer to peer, that it's going to the person it's intended for, is because of this distributed system of nodes on the network called miners that use large computing power to keep it secure. And large computing power uses energy. Now, it turns out that a lot of those miners co-locate near renewable sources, largely because they're often inexpensive to be nearby. But even still, if half of the Bitcoin network is renewable, which is what most estimates kind of bring it to, that still leaves another 50%. So what NinePoint does actually is we offset the 100% of the carbon footprint of the ETF, of the Bitcoin that the ETF holds, so that an investor who buys into our ETF is getting effectively carbon neutral exposure to the Bitcoin in the ETF. Now, that was great for us. It helps to align, our business with our values, but also we know that there are investors out there who care about these issues. And ESG is one of the most important topics in investing. I personally think Bitcoin is on its way to becoming an ESG investment, irrespective of what we're doing. But until that time, I think firms like NinePoint can, help. And there are other companies that are doing this. In fact, our custodian Gemini also offsets at least some of the carbon footprint of the Bitcoin that it holds. At least it did for the first 6 months of this year. So maybe we're carbon negative when you add it all up. But in the end, for us, better safe than sorry. And it's important, I think, also for investors to know that this is paid 100% out of our management fee. So if this isn't something you care about, and that's totally fine, don't worry about it. You're not paying a nickel more for that benefit. That's something that we do because we think it's right, and because we think it's in the long run going to draw more people towards the product.
That's great. Thank you, Alex, for that point. I think it's worth sort of noting. I think Elliot, you guys are using Gemini as well for your custodian, so you've got that advantage. And Evolve obviously came to market with some carbon neutral products as well. So you've really happy to see you guys bringing products like that to market for Canadians. I think we all know that sustainable investing is important to investors here in Canada, and thank you for doing that. But I also want to take an opportunity to thank you both for joining us this afternoon. I think you guys led a really enlightening conversation on why investors and advisors should be paying attention to the crypto space. So thank you. And at this point, I also want to thank our audience for attending the second of 3 fall 2021 TSX ETF Exchange Education Series. Please be sure to join us next week, where we'll have a session that will cover 3 topics, including how fund managers are using options to enhance performance, as well as our conversation on liquid alts, and the topic of asset allocation and portfolio ETFs. So thanks again, Alex and Elliot, and everyone else that participated in today's event. We'll see you next week. Thank you.